So here is the overview I want you to pay attention to. So basically, as you can see on the screen here, this is how the top part of Form 4684 looks like. So you have to put your first name and last name. You got to put your identifying number. So in this case, this could be your social, or it can be your tax identification number, your TIN, if you don't have a social. And let's talk about Section A first. So Section A really talks about the personal use property. So you have to really provide more details to the IRS about the use property. And here, the thing here is that if the casualty or loss, or theft loss, that is attributable to a federally declared disaster, you have to click the appropriate section and you have to provide the DR for that particular property. So in our case, we chose DR 4752 because this was a federally declared disaster that FEMA has actually declared, and that there was a number attributed, a number associated with that disaster. So we put it there, 4752, and in section 1, you have to describe the property we are talking about here. So in our case, in our hypothetical case, this is a hypothetical case, and we have a single family house in Utah, and the city is Learnington, and the zip code 84638, and the date that property was acquired was December 1st, 2000. And line 2, you have the cost or other basis of the property. So this amounted to $300,000. The insurance or other reimbursement, 50 grand. And so the fair market value before casualty or theft, 350 grand. And the fair market value after, 275. So there's a delta. There's a decrease of 75 grand. So you put it on line 7, line 8. And if you are following the instructions here, if you have to subtract line 3 from line 8, the amount here is 25 grand. And I want to show you on the next screen here, we have here how you actually can find out the number that relates to a federally declared disaster. So if you have a federal declared disaster, this is how you go to the FEMA website to get more information. Next line here, this is more information about all kinds of FEMA disasters. And so here, you see the instructions for Form 4864. So you have a 4684 to give you more information. More here, you have a form, your Form 1040. So anything that you put here has to actually link to your Form 4684. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Continuing here on line 11 here, we put 500 because we follow the instructions. And when you subtract line 11 from line 10, you have a 24,500. Remember that line 10 was 25,000, right? So line 13, pretty straightforward. Line 14, we have 24,500. And line 15, the same thing. So you got to go through all the instructions here. Line 16, when we do the math, we have the same amount, 24,500. And when you actually on line 17, when you enter 10% of your adjusted gross income from form of 1040, in our case, this amounted to 10 grand. And so when you subtract 10,000 from 24,500, you have 14,500. So you put that on line 18. And I want to show you section B. Now, section B, we do not have to do anything here. I mean, this is not applicable to our situation here, but this relates to a business and income producing property. So if you have a casualty or theft, gain or loss, you have to put that here on part 1. And I'm showing you also how part 2 actually looks like. So you have a clear idea. So part 2 really relates to a summary of gains and losses. So this is where you provide more granularity to the casualty or theft of property held for 1 year or less, or more than 1 year or less. So here we have capital gains or losses and regular gains or losses. The next form I'm showing you on the screen here. So section C, this relates to a theft loss deduction for a Ponzi scheme investment scheme using the procedures in revenue procedure 2009-20. Now, what I want to say here is that part 1 and part 2 of session 3, if you have any questions that relates to this section, let us know in the comment section, and then one of our team members will get back to you. For sake of time, we did not want to to cover all the different scenarios that could occur when you have a casualty or theft in a specific situation. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about the Form 4684. Let me give you the approach you need to follow here when it comes to 4684. So when we talk about 4684, we are speaking about casualties and thefts. So this is one of those things where if you are an individual or a business, you can use this form to report losses incurred due to casualties, thefts, or other similar events. And so this form plays a significant role in helping taxpayers claim deductions for losses that are not covered by insurance or any other type of reimbursement. Okay. And so we're talking about damage to property, for instance, destruction of assets, or the loss of property due to theft. And so you are able, when you complete this form, you are able to determine the amount of your deductible loss and claim it on your tax return. And so the purpose of Form 4684 is really to help you calculate the amount of deductible loss resulting from damage, destruction, or loss of property due to events such as fires, storms, accidents, theft, or other similar circumstances. And it doesn't have to be a federally declared disaster. It can be a regular disaster or not. Okay, it really depends. So when a taxpayer experiences a casualty or theft loss, he or she may be eligible to claim a deduction on his or her federal income tax return. Now, similar adjustments may happen at the state level, but you need to really see this is on a case-by-case basis. You got to really reach out to the state's sort of tax authorities, okay? And so this deduction at the federal level or state level is generally available for losses that are not covered by insurance or other reimbursement. Because if the insurance is reimbursing you, then you do not have to file this with the IRS. And Form 4684 helps determine the amount of the deductible loss by taking into account factors such as the adjusted basis of the property, any salvage value, and any insurance or other reimbursements received. So Form 4684 is typically used in conjunction with Schedule 8. So we have itemized deductions. So Schedule 8 of Form 1040 or Form 1040 NR. So the casualty or theft loss deduction is subject to certain limitations and requires the taxpayer to itemize their deductions instead of taking the standard deduction. Let me talk to you about the benefits of actually filing this Form 4684. Actually, there is a constellation of benefits, but I want to really go to the most important one. So you have the ability, when you file this form, you have the ability to report losses, to claim casualty loss deductions. This is really important. You have theft loss deductions, insurance reimbursement adjustments, business losses, and record keeping. And so let me really go in detail here. So when we talk about reporting losses, Form 4684 allows taxpayers to report losses incurred due to casualties such as natural disasters or thefts. So by reporting the losses, you are if you had this happen to you, you are eligible for tax deductions, which can help you offset your overall tax liability. And claiming casualty loss deductions also is kind of cool because if your property, including your home, personal belongings, or business assets, was damaged or destroyed due to an event beyond your control, such as a fire, storm, or accident, you can use this form to calculate and report the loss. These losses can be deducted on your tax return, potentially again resulting in a lower tax liability. You have a theft loss deductions. You have insurance reimbursement adjustments. So if you receive insurance reimbursements for your losses, Form 4684 helps you adjust your casualty or theft loss deduction accordingly. It ensures that you do not claim a deduction for losses already covered by insurance. And Form 4684 can be used by businesses to report losses resulting from casualty casualties and or thefts. By reporting those losses, businesses can actually offset their taxable income, potentially reducing once again their tax liability. And one thing I want to say is that when we talk about Form 4684, you do have to think about eligibility. So the following individuals or entities may be eligible to file Form 4684. So you have individuals, you have sole proprietors, you have partnerships and LLCs, and corporations. So corporations can use the Form 4684 to report losses resulting from casualties or thefts. The losses are typically reported on the corporation's tax return. And for partnerships and LLCs, the same applies. So they can actually use it to report losses from casualties and thefts. And the individual partners or members can then claim their share of the loss on their respective tax returns. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 4684. So how do you actually complete this form? Let's quickly have a step-by-step guide so we know exactly what's really happening here. So what you want to do is you want to first obtain the form. So you want to have a clear idea what's really happening here. Obtain the form first. You can download the form from the IRS websites, or you can just, if you are using a tax software, just make sure that the tax software has that specific form. 4684, that's the name once again. And then you want to provide your personal information. So things like your name, first name, last name, your social, and other required personal information. You want to determine the type of the loss, right? We have all kinds of scenarios here. If you're speaking about personal use property, for example, personal belongings, or business or income producing property, and determine which section applies to your situation and focus on that section. And step number 4, you want to complete section A or B, depending on whether you have personal use property or you have a business use property. So when we talk about personal use property, we have specific instances though. So part 1, we have description of the property and date of loss. So here you have to provide a description of the property that was lost in the first place or damaged and the date of the loss. And part 2, when we talk about the cost or other basis, you want to enter the cost or other basis of the property. So it's one of those things where if you're not sure about the basis, you have to consult the instructions or just reach out to a tax professional. And part 3, if there is a decrease in the fair market value, you have to determine the decrease in the fair market value of the property as a result of the loss or damage. Part 4, you have adjusted basis. Here you want to calculate the adjusted basis by subtracting the decrease in fair market value from the cost or other basis. Part 5, you have gain or loss. So here you calculate the gain or loss by subtracting the adjusted basis from any insurance or other reimbursement you received in the first place. And part 6, you have amount of loss. Here you want to determine the amount of loss by comparing the adjusted basis with any insurance or other reimbursement received. And part 7, casualty and theft losses from other events. So that was for Section A, personal use property. Let's move on to Section B, business or income producing property, because there are 2 separate sections here. And so part 1 here, you have a description of property and date of loss. So you have to provide a description of the property and the date of the loss or damage. Part 2, you have cost or other basis. You want to enter the cost or other basis of the property. Part 3, you have decrease in fair market value. So you want to determine the decrease in fair market value of the property due to loss or damage. Part 4, this is where we have adjusted basis. So here you want to calculate the adjusted basis by subtracting the decrease in fair market value from the cost or other basis. And part 5, gain or loss. Here you want to calculate the gain or loss by subtracting the adjusted basis from any insurance or other reimbursement you received. Part 6, you have the amount of loss. So you want to determine the amount of loss by comparing the adjusted basis with any insurance or other reimbursement received. And part 7, you want to have a casualty and theft losses from other events. So the thing here is that if you have any casualty or theft losses not covered by insurance, provide the necessary information in this section. And step 5, you want to determine the amount of loss. So once you completed the applicable section, calculate the total amount of your loss by adding up all the losses reported. And then step 6, you want to transfer the loss amount to your tax return. So we're speaking here about either Schedule A for personal use property or Schedule C for business or income producing property. And step number 7, this is very important. You want to actually retain documentation. So keep all relevant documentation. So we're speaking about photos, appraisals, and repair estimates to support your claimed losses. You may need to provide these documents if requested by the IRS. It's also important to understand that Form 4634 can be complex, especially if you have multiple losses or unique circumstances. So consider consulting a tax professional for guidance to ensure that you complete the form accurately and take full advantage of any eligible deductions. Let me give you a few special considerations when filing this form this year. The thing is that you got to think about eligible events, okay? And so we are speaking about a form that is used to report losses due to casualty or thefts. And again, I want to mention the fact that you have federally declared disasters or you have regular, quote unquote, regular disasters. So casualty events include sudden, unexpected, or unusual events such as accidents, fires, storms, floods, earthquakes, vandalism, or similar incidents. Theft refers to the unlawful taking of your property. And you also have a personal and business use, so you got to determine whether the property affected by the casualty or theft was used for personal or business purposes. Different rules may apply depending on the use of the property. For example, if the property is used partially for business purposes, you may need to allocate the loss between personal and business use. You also have to think about insurance reimbursement. So if you receive insurance reimbursement for the loss, you will need to adjust the amount of loss you report on Form 4684. Generally, you can only claim the loss to the extent it exceeds any insurance proceeds you receive. So you want to report the net loss after subtracting the insurance reimbursements. And also think about the fair market value. So here, you need to determine the FMV of the property immediately before and after the casualty or theft. The FMV is the price the property would sell for on the open market. The difference between the two FMVs represents your loss. So if you cannot determine the FMV accurately, you may need to consult a professional appraiser. And think also about deductible losses. So only the deductible losses are reported on Form 4684. So for personal use property, deductible losses are generally limited to those that are not reimbursed by insurance and exceed $100 per casualty event. Additionally, the total of all casualty and theft losses for the year must exceed 10% of your adjusted gross income before you can claim the deduction. And reporting the loss can actually happen on Schedule A if you itemize deductions, or Schedule C if the loss is related to your business. So before we close to this conversation, let me give you a few pieces of information about filing deadlines and extensions for Form 4684. So the original filing deadline is April 15th. The extension deadline can go all the way to October 15th. And when we talk about extended filing deadlines, you actually have to file Form 4868 to claim that. Now, there are common mistakes I want to avoid when it comes to Form 4684. Basically, what you have to do here is that, incorrectly identifying the type of loss, failing to provide detailed descriptions, inaccurate valuation of the loss, not reporting insurance reimbursements, missing supporting documentation, incorrectly calculating the deductible loss, failing to meet the reporting deadlines. Those are a few sort of mistakes that you should avoid when filing this Form 4684. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about 4684. That's that IRS form. I gave you the overview, the approach, and now the recap. Thank you so much. God bless you. I speak to you another time. Until then, remember, stay marvelous.